and welcome. You're watching India Market Open. It's Tuesday morning. It's a news-heavy morning. Lots of stock reactions. You've got Tata Motors. You've got IIFL Finance. There'll be investors who'll be cheering. There'll be investors who'll be disappointed. So it's actually a 50-50, guys. Good morning.
Good morning.
What a Monday evening.
What a Monday evening, yes, for our markets for sure. And for the Asian markets with the Chinese data coming out and how those markets have reacted. What a Tuesday morning for them.
Yeah, absolutely. So I would say bulls are taking a breather. Except if you're a Bitcoin investor, then you're on a different trajectory. That's truly a fascinating story. But so much to unpack on the show today. So let me quickly take you through what the top global cues are. Let's start with Wall Street and a bit of a recession, markets receding from their highs is how I would put it. Not massively, but the Nasdaq, which had hit an all-time high yesterday, was down about 0.5%. This is because of Apple. Apple has slid, Tesla has slid, they've cut prices and the market's not taken that too well. So the Nasdaq about 0.5% down. Mind you, and Nvidia is not showing any signs of slacking. That stock was up 3% yesterday, even so. But the picture is shown one of a break, I would say, from an unrelenting rally. Let's look at what's happening on the bonds, though, because that's giving you a sense of what's coming and what the markets are preparing for. Some statements from Fed officials, the big one's going to be later this week on Thursday when Powell speaks in front of the government, in front of the Senate, and talks about what his plans are to control inflation. Markets watching out for that. You saw the 10-year firm up to about 4.2% on the back of that. This is also the week where all your jobs data comes for the US. So jobs data week is always a little, I think on the fence for investors because they're trying to make out what's happening with the economy. I want to come to the story of Bitcoin because it's astonishing what policy can do. And this is a story of policy. If you're wondering how 68,000 levels have been hit, a month ago, the SEC in the US for the first time allowed ETFs on Bitcoin. There are about 11 ETFs now, and giving some structure has just taken that asset class to another level. Whether it will sustain or not, etc., is always up for question. But yeah, the Bitcoin bull run, in a sense, continues. Niraj spoke about Asia and China. We'll just pull up and see what Asian markets are doing. Great chart there to show you what that rally is looking like. November 21 levels is what it's gone up to as well. Let's quickly look at what Asian markets are doing before we get to our own. And Shanghai doing pretty well. The Nikkei taking a breather after hitting those 40,000 levels. And the Hang Seng down nearly 2%. So if I were to look at it from the Indian market perspective, global cues are not so positive. You're seeing a mild, correction possibly at open, about 13 points down on the Nifty implied open. Let's quickly look at fund flows before I hand it to Niraj for the trade setup to give you a sense of what was happening yesterday. And the DIIs are the ones who are bolstering this market. FIIs may be sitting on the fence, waiting to come in. DIIs bought about 3,500 crores yesterday. Here, though, is it all about Tata Motors and IIFL, or a lot more going on?
Yeah, stock specific, exactly, guys. Just the way you and Samina put it as well. And frankly, I mean, yesterday we took an expected breather with profit booking seen in the mid space, because if you look at the small cap end of the market, that really came off, and the market breadth for a better part of the day yesterday was firmly in favor of the decliners and actually ended worse off and ended the lowest point of the day in terms of market breadth. The other point also that on the Nifty, if you see, the volumes yesterday were unusually high relative to what happens at the start of the series, so to say. And on such high volumes, with the markets having had flattened returns, just shows that uncertainty in the bullish activity at the higher end. Does it mean that therefore the markets will retreat? Maybe not. If anything, the cues are set for the markets to inch higher, but there is some bit of resistance that we're seeing there. Now, when I look at the OI data for the day or for the near term, yesterday we were talking about how 22,400 would have been a key level if taken out, could see short covering. I think the lackadaisical market movement gave the call writers a chance to shift those levels higher. So the maximum OI now at 22,500 without any damage to option premiums was done very well yesterday. So now the broad range between 22,200 on the downside, which is where the put concentration is, to 22,500 on the upside, which is where the maximum call concentration is. So that's the sum and substance. Now, Metals took a bit of a backseat yesterday. Banks kind of meandering along, nothing too great. Autos too took a bit of a backseat yesterday after having a run. But really the sectors that stand out are two. One, the hospital stocks and the way they've been beaten down is quite stunning. At some point of time, they'll probably start showing some value. In fact, people have started fishing into them in some fashion. So watch out for some of these hospital stocks. Derated significantly, probably present a buying opportunity at some point of time in the near future, if not this week. So that's part one. But the one space where the diehard bulls are now taking a backseat and saying we're not putting in fresh money to work is media. From a Z to the Network 18 twins or Network 18 TV 18 to others, there's some significant wealth destruction that has happened in the last few days, especially after the big deal that's happened between Reliance Disney. And I think from the media space, we're not quite seeing, not that the sector has created any wealth in the last 15 years, but if there were some bulls who were hoping that at some point of time, media will consolidate and there'll be pricing power, I think there is a bit of a rethink on that. So the sector probably to stay away from, at least the sense that I get, and especially from people who've been now constructive on this for the last couple of years and who are long-term investors, they too are taking a bit of a backseat. So two small sectors per se, which have gotten derated badly, but not quite seeing any kind of fresh enthusiasm.
Not surprised. I think a time correction, we know it was only a week ago we were talking about record highs, how euphoric the market is. It is a buy on dip strategy that still continues to run, and that sentiment remains intact. What you currently see is daily movements that we are picking up on. But for now, implied Nifty is well indicating to a flat to lower start. That's keeping in line with the global cues this morning. Stock specific action will be the biggest talking point, and has been actually since market closed yesterday evening to, of course, this morning. There have been lots of headlines that we are tracking for you. Let's quickly take you through the big talking point this morning, and it is Tata Motors. Evening after the markets closed yesterday, Tata Motors announced that they would be looking to demerge their two businesses into two different entities, which is the CV business on one hand and the PV, EV and the Range Rover JLR business on the other. The timeline of this proposed demerger is 12 to 15 months. The agenda or the objective of this is to create shareholder value. Management has also said that this is a logical progression for the group company. Remember, the stock is an expensive one. It's actually ran up substantially, was the best performer of 2023, continues to do well even today, posted a better set of earnings. They've worked significantly hard to reduce the debt on the books. The management very clearly working in the last couple of years to create shareholder value. The DVR also will be merged. The timeline of the merger of the DVR with the ordinary shares, I believe, will coincide with the demerger of the two businesses for Tata Motors. Tata Motors, member, is an expensive stock as compared to its global peers as well. It trades at 157 times trailing 12-month PE as compared to a Tesla or a Toyota or even a Mercedes for that matter. So how much more upside on this is something we will discuss over the course of the next couple of hours with our analysts and the brokerage community. For now, while it's positive news for an investor of Tata Motors, how much more from here is going to be a big question to ask. So that is a Tata Motors story. Remember, it is expensive. It is expensive as compared to its global peers. This demerger is on expected lines. The timeline, though, is 12 to 15 months on the counter. So moving on from there, you want to quickly come in on Tata Motors?
Interesting, nothing else, but just that the brokerage houses are completely divided.
Yeah.
So I was just looking at the notes, JP Morgan saying that, hey, this leads us to believe that Tata Motors could trade at $1,200 bucks. Investec saying that, oh, we know this story for a while. This should come off.
And it's been run separate as two separate businesses,
entities,
any which ways.
Yeah. Just the interesting, just the small deviation is that people thought that JLR would be separate and India business would be separate when the demerger would happen.
This makes more sense.
Yeah.
This makes more sense. And
yeah,
I think
now
brokerages
it's
are
PV versus CV.
So the only ones which are a little circumspect on the price rise is because of the run-up already.
Yeah.
Not because you're seeing anything negative in the demerger.
Yeah, nothing negative.
So,
but just that the PV business re-rated Tata Motors quite convincingly. Can the CV see further re-rating? I think those are questions being asked. So brokerage houses are split voice. Sorry, just wanted to add
Yeah,
that.
also very quickly talking about that, remember what happened with Jio and Reliance Industries. So you will have one company that will come out of the Nifty 50. So if Tata Motors does get split, you'll have the Tata Motors CV business and the Tata Motors PV business. PV, of course, will come in at a greater valuation. CV is at about 25 times. 25 times. So what you'd expect is a CV business coming out, but we'll discuss all that in more detail over the course of the next few hours. But the time, remember, coincides when the Tata Motors ordinary shares and the DVR also come together along with the demerger. So the timeline of 8 months to 15 months on the outset is what we're expecting. A gap up can be expected, but I personally don't think there's going to be a runaway rally on this counter in early trade. Well, that's one. The other one you want to watch out for is going to be, this is bad news, but of course we'll have Vishy standing by who will take us through a lot more detail on IIFL Finance. The company in focus this morning, and this is of course investors are going to be slightly disappointed. In a strongly worded statement, I believe the RBI has said to IIFL Finance to cease and desist with immediate effect from sanctioning and dispersing gold loans or assigning or securitizing or even selling any of its gold loans. Gold loans constitute 32% of the book for IIFL Finance. Remember, this is not the first time the group company has had a rough with the regulators. You had IIFL Security as well last year. So they are things that have happened with IIFL over the last couple of years. Couple of brokerages have commented on this. They said if they continue to be barred from lending gold loans for a 9-month period, there will be a huge impact on the EPS. Of course, like I said, Vishwanath will be joining us. We'll talk about that in more detail, or what the regulators said, what the next steps are. There is a conference call at 8:30. We'll get some more details from the management on that too. And of course, have analysts comment on this one. Well, the third one is actually good news, I'd like to believe. You've got Macrotech. They've announced a big one now, another QIP is what they're looking to do, raise about 3,000 odd crores. The reason they're doing this is to retire some debt and for land acquisition. Now, they've also been on a spur of fundraising. Remember, they had raised 2,500 crores in 2021 through the IPO. Then they raised an additional 4,000 crores in the first QIP in November 2021. Following this, they've done 3,500 crores in December 2022. So this is the fourth round of fundraising for Macrotech. They have a huge land bank. They've got about 120 odd projects. The stock was up about 1% odd. It's been doing quite well recently, but further dilution is what we're expecting. Massive fundraise there coming in from Macrotech. So these are the three on my radar, but I think the top two are pretty much the biggest talking point of the day.
One sort of, I would say, spillover impact of IIFL is a stock that I think should have at least on your watch list. A DCB bank is likely to react, so they put out a notification, as they have to, as per SEBI rules, to the exchanges, saying that they do have a co-lending relationship with IIFL Finance for gold loans. One can assume that there will be other banks and NBFCs which will see that spillover effect. So I would actually watch the entire pack. DCB Bank, though, of course, says that this arrangement is since August 2021 and they have no concerns so far. They say their portfolio performance has been satisfactory and they have a due diligence process to give reasonable assurance. But keep in mind that the RBI has taken this action as far as the book goes from last year for IIFL, and obviously DCB has had a co-lending arrangement at that time. So DCB sentimentally might see an impact, even though there might be nothing very immediately
yeah, but the future impact of the business might be under question as well. So.
I mean, my sense is will go beyond a DCB bank.
Everybody associated.
Once you understand who all are associated with it. So this is a story that is only, evolving. State Bank of India is the other one. Nothing really negative, but this is an overhang in a sense. Again, maybe sentimentally. So if you recall, a couple of weeks ago, the Supreme Court eventually said that electoral bonds need to all be reversed. The system doesn't work. The key bank, the nodal bank, is State Bank of India. They were given till the 6th of March to make clear and to make public all the transactions with electoral bonds over the last few years. That means who's bought, who's received. They've gone to the Supreme Court asking for more time. So a regulatory overhang perhaps there to watch out for. Garden Reach Shipbuilders was the other one, and we're just sticking to a few stocks this morning because so much to discuss. They've signed an MOU with the Indian Register of Shipping to develop green energy and autonomous vessels, and I found this particularly interesting because this is the next leg of technology if you're going to look at autonomous vessels in this space. But that's my list, Niraj.
Yeah, I mean, that pretty much sets up, I mean, just the fact that the whole ecosystem around financiers, and I don't know, if, the Jeffries note on IIFL Finance speaks that if the gold lending ban stays for 9 months, and I don't know where they got the number 9 months, but presumably that it will take about 6 to 9 months to 12 months or whatever it is. But the 9-month number, they're saying that if the gold lending ban stays for 9 months, the EPS impact can be over 25 to 30%. You can do the math and figure out what will happen to IIFL Finance today. There is a note from Kotak on Delhivery. They've upgraded the stock to a buy. The target price has been raised to 570. So I mean, it's all the bad news. There's some good news maybe for Delhivery. They say that amongst everything else, the tall statement in the note is that e-commerce players are realizing that there isn't another company like this one. You know, very interesting. They say that they've built in a 5-year period of overperformance, making Delhivery grow 1.2 times the sector growth, and there are ramifications for margin improvement, magnifying benefits from share gains. So let's see if this stock has a bit of a positive reaction. A 500 crore market cap company, these days we're getting one small company every single day, which is interesting. We have no idea about CL Educate, to be honest again, but noted investor Matthew Sirac has bought about 10.35 lakh shares of the company. At some point of time in the show, my colleague Anushi will come in and talk about what this would mean in terms of shareholding, etc., and what is CL Educate all about. But note that if the stock reacts, this is the reason Matthew Sirac has bought into CL Educate. So that's the other one. And I'll watch out for some of those wind power companies, guys. Today, too, we'll have a bit of a reaction, very likely, because they were locked on a lower circuit, especially Inox Wind.